Good evening everybody, welcome back to another Chart Nerd technical analysis video. Today I will be covering Curve Finance. The ticker is CRV against USDT on the monthly time frame. I will also be looking at the weekly time frame too. Now before I start, this video is not financial advice and is all for educational and entertainment purposes only. If you do enjoy the content however, please do give it a thumbs up, a comment and maybe even subscribe if I'm lucky. Now, looking at Curve Finance here on the monthly time frame, I do believe that potentially what we're in here is some sort of massive falling wedge where we're getting compressed and squeezed into this corner here. And I think that potentially we may see some real strong recovery from this project. Now, I know that in the past, in 2023, August, it was around here, Curve had an exploitation. I think it was about $69 million from their Python protocol. But since I think they did make and sort of meet amends and have been working on getting people's money back, and I'm really building a strong community base. I've been following some of them recently, and the sort of TVL and the locking periods and the lockings that are going away really seem to be growing, and there's a lot of user engagement on X and so on and so forth. Now what happened here, and let me explain this sort of breakdown just after August when we started to make the recovery. So first off, you can see this wick here in March of 2024. If I get the EMA on, the monthly 20 EMA, which is this yellow line, the data would have backtracked to somewhere up here, but we haven't retested this 20 monthly EMA since back probably here in January of 2022. So it's no surprise that we've come down, retested it, but not on the first time of attempting to do so, breaking out. And in fact, we've done the opposite. We met it really strongly as resistance and equally formed this descending resistance line and have sort of crashed back down to this descending support level. In theory, it's just doing what it's meant to be doing inside this larger pattern that it's been in since 2021, and there's nothing really out of the blue here, regardless of this event that occurred in 2023 that's out of the ordinary. Now, another thing to explain this breakdown is we had this key level of support here at around 44 cents, and we had a horizontal level of support, and we had this sort of rising level of highs. And what this is something where you come into this pattern and start forming higher highs but holding the same level of support. It's something called a right angled broadening wedge. And now this is a bearish pattern when you're coming off of support and failing to break out of resistance. And this is why during this sort of build up in this pattern, we ran up to the monthly 20 and met it as resistance. And what you'll see is when we came back down, we lost that support and met it as resistance last month. Okay, so there's nothing out of the ordinary really. You just formed a right angled broadening wedge into the 20-month EMA, lost the support of that wedge, ran into it as resistance and have been pushed back down. The technical target, how we get the technical target of this right angled broadening wedge is simply going by this point to this point here. Now, isn't this ironic? Look, where we've broke down, look where the technical target was, 25 cents. Now, we did come back and wick below that, but you can see we're being pushed up right now. We did actually come down to 21 cents, but the technical target from the breakdown of this right angled broadening wedge sits down at 25 cents, right on this support line of descending support where we've had multiple points of contact. So again, we've had multiple points of contact trend line. And there's no surprise that we've just had another two now off of this right angled broadening wedge, ran into the monthly 20 EMA, dropped. Okay, so you've just come down, come up into resistance and dropped, but you've fallen back to this support. So right now it doesn't seem like there's going to be much more of a better opportunity to be getting into something like Curve. And again, not financial advice, as I said in this video at the start of the video, nothing is financial advice, but this really does look like something that could potentially start making a really strong recovery here. Now, there are levels of resistance above if we do start seeing Curve sort of start to break out here. If we look at the weekly time frame, we've got the weekly 20 and 55 EMAs above us on our heads. Now, we entered or created a death cross, should I say, where the 20 EMA crosses below the red 55, and this indicates a downtrend. Okay, now we confirm that by capitulating and then running back into the weekly 20 and failing to break it many times. So since this top out here in December of 2021, you can see that these EMAs have always acted as resistance for Curve, and that all plays a part of being inside this falling wedge that we've been speaking about. It all plays a part of it. So the EMAs have been acting as resistance in this downtrend, along with this descending resistance, and the support has been acting with this descending support. It might be a case where from this low that we're currently at 21 cents recently, we're trying to retrace back to this high. It might be a case that we do see some relief here and sort of potentially come up over the next coming weeks to around 45 cents. You can see that the 20-week EMA is roughly around that sort of price too. So we may even run into that as resistance first, but we may sort of start making our way up to around the 40-cent area. And then I think at this point, potentially coming back for some double bottom where we'll have to hold this low. This 21-cent low has to hold, because if we come up and come back for a higher low in a correction and hold a higher low and then start working up, you're basically building some sort of base structure. So what you want to see is some sort of double bottom pattern form under this level of resistance right now. We want to see ourselves work our way up to resistance, come back for a higher low, and sort of build some sort of double bottom or ascending triangle, and essentially trying to tackle out of 45 cents and getting back up to this 1 fib of where we've fallen from. And right now, this correction potentially might be in, because it looks like we could have had some sort of A, B, C wave correction. And right now we're looking for the next impulsive move up to these fibs on the weekly, and equally up to these EMAs, which are also above us and sort of tie in with this golden ratio. So before any excitement occurs here for Curve, there is a lot to do. There is a lot to do still, but it doesn't mean that this isn't something that's just occurring because of this pattern that it's been in for multi-years. And once this level of resistance, once we start getting back above this level of resistance, this might be the best point to get involved. Again, not financial advice, but if you see Curve get above and start holding it as support and eventually tacking out key levels of resistance above, then this is where it's off to the races. And this whole pattern, the technical target, is normally retracing back to where this sort of pattern started forming from. So when you're starting to come down, you generally tend to retrace back up to where the pattern started. So not financial advice. Some people might wait on the sides for the break of this resistance, for getting above this monthly 20 EMA, holding it as support, and that's your go signal. Okay, so just waiting for the confirmational break of this descending resistance. But right now we are at support. We are being pushed back up here. It wouldn't surprise me to see some relief, but I would like to see some sort of double bottom over the next couple of weeks form under 45 cents, and then we can start breaking out and looking at future targets towards the end of Q3 into Q4 for Curve Finance. So I hope you enjoyed that update today, guys, from Chart Nerd TA. Take care. Peace out.